Hi, welcome back to another episode of Insurance Test Help. Today we are doing the Washington State Disability Producer Exam. All the other states call this the health insurance exam. Washington State likes to be a little bit unique and call it the Disability Producer Exam. So this is going to be selling health insurance just like everybody else, and disability insurance, long-term care. You do not need a pre-licensing course in the state of Washington, so it does make it a little bit challenging. I do recommend you take one. This video is an addition to that, not instead of that. So this is made specially because I did have a couple people ask me for it because they were having some trouble getting just far enough across the finish line, just because there's no pre-licensing requirement. So it does make it a little extra challenging to do some of these insurance exams in Washington State. So you need 70% to pass. So hopefully this, along with whatever else you're using to study, will squeak you across the finish line. So here we go. So to prevent this video from being the longest video in the universe, we are going to use it along with a couple of our other videos that already exist. So I am going to ask you to look at a couple of those when I call them out. So just keep that in mind. When I tell you to go look at another video, make sure you do that. So first and foremost, this is actually in the Washington State PDF. You represent the insurer. It's also on every single insurance test I've ever taken. You represent the insurance company, not your customer, not your agency, not yourself. You, as a producer, represent the insurer, the insurance company. Make sure you know that. It's on every insurance exam. What is insurance? Insurance is the transfer of risk. Basically, we all kind of know what insurance is from having car insurance and everything else, but basically you are preventing having to cover some sort of catastrophic thing happening all by yourself by transferring the risk to an insurance company. Rolls right into the next question. What is risk? Risk is the uncertainty of loss. Okay? The uncertainty of loss is what risk is. There are an awful lot of general insurance questions. I have a whole video called General Insurance Questions for the Life and Health Exam. Please watch that video. It will help you nail down some of these just definition ones and get them sort of going through your brain, okay? We're going to hit them real quick here, though. Loss in health insurance is the amount of financial loss you incurred due to an accident or illness covered under your health insurance policy. It comes in two forms, insurable and not insurable. Pure risk is insurable. That means there's a chance of loss or no loss. Speculative risk, there's a chance of winning or losing, like gambling, the stock market. Those are not insurable. You can only insure pure risk. A hazard in health insurance and in all insurance is something that increases the chance of a loss occurring. So a hazard makes it more likely to happen. Hazards come in three types: physical hazards, moral hazards, morale hazards. Physical hazards are things that, like, you can fall down the stairs, right? It's a physical hazard. Moral hazard, you're just got real bad character, you make bad decisions, and then morale hazard is just you have an attitude of indifference because you have insurance. Like, oh, I can do that because I have insurance that'll take care of that. So I can, behave a little inappropriately because if something happens, I have insurance. Perils come with all risk in insurance. The perils in health insurance are illness, injury, disability, and of course death. So know those. The types of loss in health insurance, we're going to hit this a little harder because it's not in our general insurance video. It's specific to health insurance. Health insurance types of loss are disability. You can be disabled. That's a type of loss you would have that your health insurance would cover. You also can have medical expenses, right? You got sick or you had a surgery and you needed to be reimbursed for that, or you had to go into long-term care. All of those are types of loss that health insurance is there to help you with. One of the spots where the Washington State exam is more specific than some of the other ones is the methods of handling risk in health insurance. Insurance is obviously the transfer of risk, right? The shifting of risk. But the Washington State exam wants you to know there are other ways of handling risk in health insurance. You can avoid the risk, don't smoke, right? Stay away from, dangerous things. Don't, swim in, dangerous places with their sharks. Avoid things, right? You can also accept the risk. You can just accept that certain things are going to happen to you. And you can also reduce the risk. Just do things a little more carefully. Slow down. Older people can reduce risk by putting handrails in their bathrooms and in their showers, using bath mats, using those little sticky rubber things in your bathtub. All of those things reduce the risk of, say, you falling, or we stay away from people who are sick. Those are avoidance, right? So all of those things are different ways of reducing and mitigating our chances of being sick. But please remember, if you see it on your test, insurance is the transfer of risk. And while we're hitting on it, please go back and watch the general insurance terms video. You're going to get some things out of it. Maybe pick up 1 or 2 points. I would hate for you to miss by 1 or 2 points based on something that's easy as a definition. There's also a free printable. I'll put it in the links down below with all of the definitions. I suggest you read through them. Anything you can remember that just puts some silly definition in your brain that you pick up an extra point that you pass on is awesome, right? The elements of insurable risk, Washington State's very specific in their layout that they want you to know what the elements of insurable risk. To be insurable, not only does it have to be pure risk, it has to be due to chance. It has to be definite and measurable. It can't be vague. It has to occur at a specific time, right? And a specific cause. It can't just be, I don't know when it happened and I don't know what caused it. And, it has to be outside of your control. You can, done it, right? And it has to be statistically predictable. Insurance companies, they want to know how to predict loss. That's how they prevent losing a ton of money. It also has to be not catastrophic. You will find that things like war and catastrophes are usually excluded for that specific reason. And it also has to be randomly selected and come from a large group of people. They use something called the law of large numbers to determine the sort of actuarial tables, if you will. That's sort of how they determine how losses happen. We'll hit it right next slide. The law of large numbers is on almost every insurance exam. It is not in the Washington State outline, but basically the law of large numbers says that the principle is that the more times an event it repeats itself, the more predictable the outcome becomes. So the larger the group of people, the more likely you are to know the result. So the more men that are age 50 that are from a certain background, you know how many are going to get a heart attack, right? You can just predict what that is based on statistically what happens to them. So that is sort of what they're talking about when they're talking about statistically predictable in that last slide. This is this law of large numbers. So I did not see this specifically, this law in there, which is weird because it's in a lot of other state ones, but just so you know, that is what they're talking about for the statistical prediction part. One thing that outline does mention a couple of times is that they're very clear about the relationship between insurer and producer. So make sure that you fully understand that you, as a producer, represent the insurance company, the insurer. One of the laws it wanted you to know was the law of agency. That is one of the representations where you as a principal, where you as an agent are the go-between between the principal, which is the insurance company, and the insured. So basically you are when the insured talks to you, they are talking to the insurance company. You are a producer. This is in there. You need to know this. You are an individual licensed to sell, solicit, or negotiate insurance on behalf of the insurer. That is what your license allows you to do. If you don't have a license, you cannot do this. Express, implied, and apparent authority, also very clearly laid out by the state. Express authority. This is the authority in your agreement that you have with the insurance company, that they signed, you signed. This is the authority given to you in writing, very clearly laid out in your contract. Implied authority. This is the authority that is not expressed or written. It's just kind of like, kind of like it's not there, but it kind of is. And then apparent authority, that's the authority that the public assume you have just because you're an agent. So the only real authority you have contractually is the express authority. But because you have those other two authorities, applied and apparent authority, you are walking around with a lot more authority in the eyes of the public. And you have to be very careful with how you behave because of that, to make sure that you are behaving in a very, very proper way. So one of those things is that when someone pays you, they are essentially paying the insurance company. They are paying the insurer. So a payment submitted to you is the same as submitting it to the insurer. If they pay you at 11:35 in the morning, they've essentially paid the insurance company at 11:35 in the morning. So the law of agency is basically that you have a legal relationship and you have a responsibility. And not only do you have a responsibility where you're bound by your actions, but the insurer has a responsibility. You are both bound by your relationship with each other. So you need to be very above board and behave in an appropriate manner. So that's basically what all of those authorities are. Okay, right into parts of the policy. They are the elements of the contract. There are 4 elements of a contract. You need all 4 of them for a legal contract. Offer and acceptance. That is, the offer is you filling out an application and sending it to the insurance company. The acceptance is the underwriter approving your application. Consideration on your behalf is you paying your premium. Consideration on the insurance company is them honoring to pay your claim. Competent parties, nobody can be a minor, nobody can be incompetent, nobody can be under the influence of drugs or alcohol, and the contract has to have a legal purpose. If I had to guess, the question on the exam is probably going to go something like this. Which one of these is not able to enter into an insurance contract? And then there's going to be something about somebody being drunk or somebody being a felon, and but like it'll try to trip you up, because I don't know why they always like to put sort of trippy questions on there rather than just straight up questions. But just make sure that competent parties can have to be one of them. So obviously if you're under the influence, you can't sign anything. If you're a minor, you can't sign anything. And if you consideration is you paying your premiums, I think those will be probably the 2 test questions. State of Washington, want to make sure you know what indemnity is. It's right in your little sheet there. Indemnity is the principle of making someone whole by paying for an incurred loss. So basically, they are going to restore you to your pre-loss condition. You're not going to make money off it. You're going to be compensated, right? You're going to be put back together. Humpty Dumpty, kind of put back together, as good as you can be. Okay, this is a really important concept with all insurance, especially health insurance and life insurance, is that everyone is going into it, both you and the insurance company, with utmost good faith. This means you as a person are filling out the application both as an agent and as a person applying, using honest information and full disclosure, telling all of the goodies about your accurate medical history, right? As an agent, you're asking people all the questions on the application, and the insurance company is doing the same. They're being honest and truthful with you that they're going to do everything. So utmost good faith. Everybody's being honest and everybody's being a good person. Reasonable expectations in health insurance, that conduct of insurer, that you will get fair and ethical treatment. Words and phrases will be plain language. There won't be any weird jargon that you can't understand. Policy benefits, all the coverages will be in the policy, and that policy limitations will be easy to understand. Warranties, representations, misrepresentations, and concealment. These were all on the outline for Washington State, so there are going to be a question, at least one on there in one of these. Warranties are things that are truthful, real truths. Representations are things you believe to be true. Misrepresentations are untruths. And concealments are things you are trying to cover up. If you need more details on these, I do have quite a lot in my life and health last minute review on warranties and representations and concealment. So if you wanted to check those out there, but I also have a bit here. We're going to go into warranties and representations because those are going to be the two big ones. Concealment, we all know it's like hiding stuff, right? And misrepresentations is just the opposite. So representation is something that you believe to be true. I have no history of heart disease, right? I believe that I don't have heart disease, but I don't actually know because I might, but I don't have a history of it. So, so far so good. But a warranty is something that is an absolute fact. I do not take blood pressure medication. So that is an absolute fact that I am, I'm not lying. Obviously, if they prove that I was taking blood pressure medication, that would be a concealment and a mistruth because I would be lying about it. Okay, and then of course the big brother of concealment and mistruths is fraud. So fraud is false information, fake claims, identity theft, and upcoding that occurs at the billing level. So all of those sort of stealing and fake things and false information and trying to scam, those are all fraud. So don't do them, don't be involved in them, report them if you see them. Adverse selection. So this is an insurance concept that basically underwriters are trying to avoid. It is people who have more claims tend to buy more insurance. So people who like to use their insurance and file lots and lots of claims tend to buy more insurance. Let's get into the application process. It's very clear in Washington State that's very intricate. So in the application process, you are basically doing an interview with the person. You are filling out the forms with them in a very detailed fashion, as thoroughly as possible, answering all the questions. That application becomes a really important document because obviously you are interviewing them. So you're asking, any health problems, and then you're basically going through a list. Usually there's a list of, any kidney problems, any liver problems, any, and on and on and on it goes. And then that application is submitted to the insurance company. And then the application is put in and stapled right into the issued policy. Nowadays, there's not a whole lot of stapling, obviously, going on, a lot more electronic, but just stick with the whole stapling concept for your exam. That whole stapling concept is part of this concept right here, which is the entire contract provision. The entire contract provision is that the policy and the application make up the entire contract. Okay, so both of those make up the entire contract, the application and the policy. So you as a producer do not have the authority to change anything or to waive any provisions or change anything in the contract, and that the policy and the application make up the entire contract. That is the entire contract provision. It is something you will need to know. There is a required notice to applicant that a credit report will be ordered, and that is concerning your past credit history and your past health insurance. So that is part of the credit application. That's part of the application process, that a credit report will be ordered, and you have to provide notice of that. So if you see anything about providing a notice about somebody's credit, make sure that you understand. Fair Credit Reporting Act obviously protects consumers, ensures accuracy, ensures privacy, and part of that last one requires you to notify people when you're accessing the credit report. Gramm-Leach-Bliley Act, that is protects consumers, limits the sharing of data, and safeguards your personal data. So no share, spread all the information around. Your stuff's private. When you're doing the application, it is the agent's responsibility to ensure accuracy and completeness, as it is a main source of underwriting information. Every health insurance application requires a signature of you, the agent, the proposed insured, and if the policy owner is different than the proposed insured, it also requires theirs. So sometimes there might be a different policy owner than the proposed insured. Sometimes they're the same person. So sometimes it's just the proposed insured and the agent, but if it is a different policy owner, then there would be 3 signatures. Any changes on the application must be initialed by the applicant or the insured, not scribbled out by you and initialed by you, the agent, that's probably going to be the question to try to trip you up, that you can just initial it and make the changes yourself. That's not the way it rolls. It has to be initialed by the assured or the applicant. And then there's a whole lot of rules about how you cannot disclose or not disclose. It's real simple. Don't disclose any personal or privileged information about an individual at all. And you don't have to worry about anything. So basically, when a customer of yours tells you something, it's private. Don't disclose their stuff. If you do need to know that first one, written authorization dated and signed within the past 12 months, that's going to be the ticket right there, or with the warrant. But just don't talk about people's private stuff is really going to be how it's going to be in your real life. Rolling back on utmost good faith, remember, you as a insured provides their entire medical history, and the insurer on their side explains the coverages completely inaccurate. Washington State has a Healthcare False Claim Act that failure by an insured to disclose a prior condition has a whole bunch of penalties that goes with it. So if you are still being treated by a healthcare provider and you do not disclose it for a prior condition, it is a violation of Washington State's Healthcare False Claim Act, and it's Class C felony, and you get 5 years in prison or $10,000 fine. Basically, it's designed to reduce overall costs and false claims. So I would know that the Healthcare False Claim Act is meant to reduce overall costs and false claims. Washington State list was very specific on a lot of these clauses they wanted you to know and provisions. Consideration clause for your health insurance exam on your behalf is the application and the initial premium. So the consideration clause for a insured is the application and the first premium payment. Those are your consideration. That is your legally binding consideration that puts the contract in force, right? So that's, when we looked at those 4 parts of a contract, consideration. All right, after you've applied, it goes to underwriting. Underwriting uses several sources. They use the application, they use your medical reports, they use medical records, and they use the physician statements. Medical Information Bureau is a shared database of health information used by insurance companies to assess individual risks. So that contains a lot of information about your medical history, medical conditions you might have, hazardous activities you might participate in. So that is the MIB, the Medical Information Bureau. Just try to remember that. I usually try to remember it with the acronym for some reason. A credit report, that is one of the things they use in underwriting. So your credit report contains your debt to income ratio, your length of credit history, and your payment history. And they use those things to help determine what your rates are going to be. They also use an attending physician statement. So that is, if they decide to get one, that gives them more detailed information on your medical history and any risks that you might have. So all of those things come back and you could be table rated. This means that you may not be the healthiest person there is, right? Table rated people pay higher premiums. It means you're a substandard class, maybe due to high blood pressure. So you don't necessarily, with the table rating, there's essentially like 3 different things. There's substandard, below, like you're sickly, right? Standard, you're a normal person. And then there's preferred, you're kind of healthier. So, and they give you a better rate. So standard, normal person, normal rate. Substandard, lower rate. Preferred, better rate. That is on your layout. So that is going to be on your test. So before I go any further, one of the things I did use to determine what was on the Washington State test was the layout from the state of Washington. So if you go to their website, you can find a full list of all of the things on all of their insurance tests laid out in a little list. If you can't find it, you can hit me up in the comments. I'll link you to it. And it will give it to you in a PDF format, and you can kind of lay it out and list on what they think you need to study for. But that is basically what I use to come up with this. I do want you to use this along with some sort of other study material like a pre-licensing course to come up with the ideal thing to set you up for success, obviously, right? Like, don't just use this, hopefully. But let's move on. So that was how I came up with when I keep saying what's on the list. So delivery of the policy. In health insurance, delivery of the policy occurs when the insurer provides the policy to the insured. The olden days used to walk that over, so they came into your office and stuff. Today that's all electronic. But for your exam, they do still sort of use the words like you're walking it to them or they're coming into your office. So just assume that this is kind of an in-person meet and greet. A statement of good health. For the a statement of good health is that you are signing that you are in good health, you have had no recent medical issues, and you have had no changes in your medication. Sometimes it's been a while since you applied for your health insurance, or it's it just has been a while since you've had it between the application and delivery. So sometimes this is at delivery, sometimes it's just at the right with the application. But your statement of good health, it can be later. So just know, because the state of Washington did specifically mention it, the statement of good health is a separate document where you are attesting that you are in good health and have no recent medical issues and have not changed your medication. So let's get to the policy starting. It starts on your effective date, obviously. When it starts, it begins the free look period. The free look period is, in Washington State, a 10-day period that allows a new policyholder to review and return or cancel the policy with a full refund. If they return it within 10 days, they get a full refund. If it is a Medicare policy, they get 30 days for that full refund. If it is a long-term care policy, they get 30 days for that full refund. So know that your free look, 10 days, regular health policy, 30 days for the older folks, Medicare and long-term care. What is a buyer's guide? Buyer's guide is just a standard informational booklet that comes with your policy, just kind of lays out, it's not specific to you, it's not your actual policy, just kind of has all the definitions and that kind of stuff in there. So if there is something about what is the little booklet that comes with all the definitions, that is a buyer's guide. When someone pays you in Washington State, they are paying you in a fiduciary capacity. That means that it's a trust position. So whether they're paying you no matter which way, it is you are receiving it on behalf of the insurance company. It cannot be just shoved in your account or commingled with your own funds. It's basically has to be kept separate, and you are in a trust position for both the funds that you are being handed by the insured and the ones that are going to be passed along to the insurance company. People will pay you in different ways: monthly, quarterly, semi-annually, and annually. Those are called premium modes. And some insurance companies charge different rates. Sometimes it costs more to pay monthly than it does to pay annually. The grace period is also longer, the longer the mode is. So shorter grace period for the shorter modes, longer grace periods for the longer modes. In Washington State, you must deliver or mail a receipt every time you receive a premium from an insured or applicant as soon as possible. And in Washington State, it is unacceptable to obtain a delivery receipt from a client where they have said they've received it, and then for you to retain the policy. I don't know why anyone would do that, but apparently that's something they specifically spelled out. So somebody did it at some point, and they don't want you doing it, and it's something they're testing on. So obviously it's a big deal to the state now for some specific reason. So make sure you know the answer to that. Okay, parts of a policy. This is policy structure. Policy is broken into 4 different parts. You can use the first letters of each one to remember it. It is the acronym DICE, Declarations, Insuring Agreement, Conditions, and Exclusions. So if you use the acronym DICE, dice. It helps to sometimes remember that in case it is on your exam. Declarations is basically the first page. That's where your names, dates, and the amounts usually is. And then in a health policy, the insuring clause is where all the good stuff is. That is who the insurer is, what the benefits are, where all of the coverage is, all of that good stuff. That is going to be in the insuring clause. The conditions, a lot of these we're going to take one at a time, so you don't need to, and some of them we've already hit, so you don't need to hit them all right here. Don't worry about it. We've already hit entire contract and grace period, so don't freak out that I'm going too fast. But conditions are basically things that limit, the policy. And then, of course, exclusions, occupational injuries are covered by your workers' comp, intentional self-inflicted injuries, auto accidents, even though everyone that I sell auto insurance to seems to think their health insurance covers that, which it doesn't. War, not covered. Some mental disorders, some medical insurance does cover that. If you have that specific coverage on your medical insurance. Hazardous sports sometimes are not covered, and cosmetics procedures and elective treatments are not covered. But basically, you just need to know that those are exclusions, okay? Okay, here comes all things Washington State. Washington State Commissioner, elected. He serves for 4 years. He can do tons of things. He can issue cease and desist orders. He conducts examinations. He issues your license. He also issues certificates of authority to insurance companies. He also takes complaints. He also finds and suspends producers and insurance companies. He's a really powerful dude. So that's insurance commissioners have a lot of power, and they have a lot of broad stuff that they do. Okay, certificate of authority. This is from the commissioner to the insurance company. This is their right to do business in the state. They need this to sell insurance in the state, or they cannot unless they are dealing with surplus lines. So basically, this is their company insurance license. This will be on your test just to confuse you with your insurance license. So expect that to be on there. Understand that the insurance certificate of authority is for the insurance company, not for you. Once the insurance company has that, they are an admitted insurer. That means they are licensed by the state. They must follow state laws and regulations, and policyholders are now protected by the state guarantee fund. Okay, once they're an admitted insurer, they have to join the Washington State Guarantee Association. That is funded by admitted insurers in Washington State. They all authorized and admitted insurers must be members to do business in Washington State. So basically, that is created to protect policyholders, insured beneficiaries. In case one of the insurance companies becomes insolvent, that fund kicks in and would pay for whatever their losses were on that policy. There are some limits to that. The insurer would have, the Guarantee Association would pay the lesser of the amount the insurer would have owed, or the cap of $500,000. So if you had $1 million life policy, for example, you would only get $500,000 if your insurer went bankrupt. If you had a long-term care benefit for $1 million, you would only get $500,000. But if you had a long-term care benefit for $250,000, you would get your full $250,000. So just know that that $500,000 is the cap, but it is the lesser of what that insurer would owe, or the $500,000. I think that rules regarding the $500,000 for the Washington Guarantee Association is highly testable. I also think this question for the Washington State Guarantee Association is highly testable, that no insurance company can advertise that that the Washington State Guarantee Association guarantees anything. They can't put that on their advertising, that they are approved by the Washington State Guarantee Association, or they are guaranteed by them, or anything like that. That is an unfair trade practice. That could also be a test question. So just keep that in mind, $500,000, and no putting it in your ads. Okay, we're staying on licensing here for a bit in Washington State. You have to display your license in all places of business that are open to the public. So if you go into a insurance office, your license is supposed to be hanging on your wall. So that could be a test question. All licenses are supposed to be publicly displayed in all places of business that are open to the public. The insurance commissioner approves forms, but he does not write insurance law, and he does not set insurance prices. He does approve insurance forms and the types of applications that insurance companies use. So there could be like a tricky question where he talks about approving prices. He does not set prices. Insurance companies set prices. The state legislature sets laws. He basically approves forms and enforces those laws. He does not set prices, and he does not make laws. Lots of numbers for you to remember about Washington State Commissioner and about Washington State in general. The insurance commissioner for Washington State may inspect records for an insurance company whenever he wants to or whenever he deems necessary, but he must do it at least every 5 years. So 5 years is going to be the number for your test question. Lots of free pickup questions here. There's going to be some test questions about getting your license. These should be easy test questions to get. So basically, you have to be 18 years old, you have to pass the exam, pay the fees, and not have any acts that are reason for denial. So those acts are basically felonies, right? So those should be pretty easy answers to get. So make sure you know the rules to get a license. In Washington State, after you pass your test, you're going to have to give them some fingerprints. So that is also could be on your test. I hope that's one of your questions because that's just an easy win, right? License renewal and continuing education. Everyone in Washington State has to complete 24 hours of continuing education every 2 years. They do not let you carry those over from session to session. So if you did 26 hours, they're only going to give you 24. That's it. Basically, start over again. So you don't get to roll them into the next one. I don't think that's going to be the question. I think 24 is going to be the question. And they're really going to want to know how many of those need to be in ethics. They want to make sure you know your ethics ones, even though you're just going to have to do these when you renew your license anyway. So I don't know why it's a test question, but just make sure you know them. 24 hours to renew your license. 3 hours of those have to be in ethics. The commissioner can grant waivers based on medical conditions, military service, and really he can grant a waiver for whatever he wants to. But 24 hours, 3 hours in ethics. People who sell long-term care insurance have to have 8 hours of initial training, and they have to have 4 hours every 2 years of ongoing long-term care training. You have to be very cognizant of taking care of the older people, so extra care and attention. So 8 hours of initial training to sell long-term care, 4 hours of ongoing training with your renewal. And like we said before, the commissioner can deny the license for anyone who has committed a felony. I think this could be a trick question if it's on there. If you fail to renew your exam on time, you can still renew it if you renew it within a year. You just pay the late fee. You don't have to retake your exam. If you renew within 12 months of expiry, you just pay the late fee and make sure you have all your C's and everything. Don't have to retake the exam. This is one that was specifically mentioned in the list of things for Washington State. They wanted you to know that you have 30 days to notify the insurance commissioner of a change of address. So make sure that you really know that. I think they're going to test you on it. This was also on there. They wanted to make sure that you knew you had 30 days, that you have to have a valid email address with Washington State, and you have 30 days to notify them if you change that email address. People outside of Washington State, non-residents, can have a license in Washington State if you have a similar license in your resident state. This is quite common. You can apply for a non-residence license as long as you have the same license in your state. Quite common, especially now that a lot of people work remote. Transacting insurance without a license is a crime, but also you cannot receive commission, so a service fee or any other consideration if you do not have a license to transact insurance. So people that are receptionists and things like that in insurance offices, they cannot receive any sort of form of bonus based on sales in an insurance office at all, based on the sales of the office. Even though if they didn't participate in the insurance transaction itself, they cannot be paid based on sales or commission of the office. And on that note, it is a Class B felony to transact insurance in Washington State without a license. So don't do it. Don't share your commissions with your secretaries or any of those. And, just make sure everybody has a license. Temporary license. Unfortunately, things can happen where temporary licenses need to be granted. The commissioner can and does grant temporary licenses for up to 180 days in Washington State without a written exam, usually in the following circumstances. Often it is a spouse of a producer who passes away or becomes disabled. This is to allow the producer to recover or to allow the business to be sold. Agents do die. Unfortunately, one of my agents that I actually worked for here passed away unexpectedly. So that was very sad. And it took actually quite a long time for her agency to be, her father, who was actually an agent in his 80s and had a license, to actually took over her agency and managed to get that sold and taken care of, which was quite wonderful for her, that he loved her to that degree. Anyway, side note, but he had a license, so it wasn't an issue. But if he hadn't, obviously somebody in her family, maybe her husband, would have had to have done that. But in the state of Washington, a spouse could be granted a license for 180 days. The commissioner can actually grant that to anyone he wishes as a temporary license. That, I think, is highly testable. I'm pretty sure it was on my exam. Not in Washington State, because I took my test here in Georgia, but I'm pretty sure I saw that on my test, either in property casualty or life or something, that about temporary licenses. So make sure that you know temporary license, 180 days, and the commissioner can do that with pretty much anyone he wants. The question's probably going to be posed as a spouse or somebody to take over an agency on a temporary basis due to a death or disability. One thing the commissioner can do, he can suspend your license because you've been up to no good. If he does suspend your license, he must hold a hearing within 30 days. I would know that 30-day number, and that 30-day number repeats itself in a lot of things. So when in doubt, I would pick 30 days as just kind of your default. If you're not sure, don't ever leave a question unanswered. Make sure you pick a number. That would be my default number for a lot of questions if I had no clue whatsoever. But on that one, know that it's 30 days. You have 90 days to respond to an order by the commissioner to request a hearing in Washington State. If you do not, you waive your right to a hearing. So if he sends you something, you're basically saying, I agree with you, if you don't request a hearing within the 90 days that he gives you. Your insurance company must file a termination when you are no longer appointed. When you stop working for them, They must file a termination that your appointment has been terminated with the state within 30 days. See, that 30-day number keeps coming up. That's why I would pick it as your default if you don't have a clue. Learn the numbers, right? But have something to fall back on if you just a total guess. But insurance companies, for termination, 30 days. For appointment, 15 days. Okay, just rounding out some of the other Washington state laws. The first page of any health or disability policy in Washington state being sold to anyone eligible for Medicare must notify the applicant that this is not a Medicare supplement. This is actually a federal law, but we'll put it in here. Do not call list. You must maintain your do not call list for 24 months. You must scrub your list against the National Do Not Call Registry. You can't just be calling random people. You have to check your registry every 31 days. You also cannot call before 8 a.m. or after 9 p.m. Make sure you know those hours. I think that is the test question. You are only allowed to call between 8 a.m. and 9 p.m., not outside of those hours, even if they're your customer. So make sure you know that those are the hours you can call people during. Okay, health insurers must pay claims immediately. Time payment of claim provision. Insured must provide notice of claim, right? Within 20 days. The insurance company must provide the claim forms to the person so they can fill them out. They got 15 days to give the person the claim forms, and the person has to provide a proof of loss within 90 days. If I had to guess on that one, the question is going to be who has to provide the claim forms and when. And I would say it's going to be the 15 days on the claim forms. I just think that they always want you to know that the insurance company is responsible for providing the claim forms to the insured. Okay. Suing the insurance company, right? They aren't doing your stuff for you. You're just totally upset at them. You can take legal action against the insurance company, but you have to give them 60 days. Got to give them a chance to do their stuff. So you cannot file you cannot file a lawsuit against them any sooner than 60 days and no later than 3 years after proof of loss. So you've got a time window in there. You got to get your stuff going. So no sooner than 60 days. No later than 3 years. That is one of the things in the little list of stuff for Washington State. So it is a time limit so make sure that you know that one, because I think that will be tested. Another disclosure for all Medicare supplements must have this statement on the first page. Notice to buyer, this policy may not cover all of your medical expenses. In Washington State, a health carrier that provides medical coverage, maternity coverage, must provide the same coverage for a newborn for at least 3 weeks. He's basically born into that medical coverage because you gave mama the medical coverage. Okay, getting into things you cannot do. Rebating. Rebating is offering inducement to purchase a policy. Here's some money, here's a gifty, here's stuff. Those are prohibited acts. You cannot do those. In Washington State, it is considered rebating if you go over $100 within a year. This will be on your test. I promise you. The insurance industry has so many tchotchkes and little gifties and water bottles and free pens and stuff like that. There will be a test question on what the rebating limits are. You can give somebody a water bottle. You can give somebody a pen and a notepad and a little gifty like that. That's perfectly fine. The limit in Washington State is going to be $100 in 1 year. So as long as you do not exceed that, it is not rebating. When you go over that with your 2 free tickets to the football game, you are now rebating, and that is a criminal act. Twisting. We're not going to get too much into a lot of these where they're on other tests because they're not specific just to Washington State, so please check them out on some of the other videos, but we're going to hit them real quick. Twisting is inducing a policy owner to surrender an existing policy and purchase a new one, not in their best interest. You're just trying to get a commission, right? So you're twisting. More prohibited stuff, discrimination. You can't discriminate against people based on certain factors, obviously their race, sex, age. There are certain things when you get into health that are not considered discrimination, like health factors, right? People that smoke obviously have worse health and they are going to pay higher rates. That's not considered discrimination if you charge smokers more than non-smokers. So there's probably going to be a question like that on there, but you can't charge somebody that is for their race or their creed or their sex more than the other person just because of that. So, or their socioeconomic standing. But, you can charge somebody based on lifestyle, like smoking, more than another person. So Washington State really went into this earlier in the fiduciary aspect of keeping your agency funds separate from your personal funds. So I'm bringing it up again. You cannot mix insurance company funds in your own funds. You must maintain a separate account for insurance company funds. Each willful violation is a misdemeanor. Make sure that you know that because they did mention it specifically in the Washington State stuff. So obviously I think there's going to be at least a question on it. False advertising. You cannot false advertise. You cannot use misleading information to make people believe that you're the cheapest, the lowest, you're just the best. You pay all the claims. You do all these things that just aren't true. Be an honest agent and you will get good people that buy insurance from you. That's just the way things are. So any sort of things that you see a question about that doesn't seem like the most truthful way of behaving, that's what they're looking for. They're looking for you to be the most honest agent, right? So if it sounds wrong, it is wrong. There are a couple more, including defamation and misrepresentation. They're in the other videos. I'd like you to watch those, like the health key concepts video, like the life and health last minute review. Check out those for the prohibited activities. They are not specifically mentioned in the Washington State key videos, but I would like you to watch those just to make sure you understand all of the things. But basically they come down to common sense. If it sounds wrong, it is wrong. So just don't do things that don't sound like good people stuff, right? Okay, let's get into Medicare. I'm going to go faster here than we did through the Washington State part because this is all in the key concepts video. So Medicare has all your 4 parts in it. Obviously, this is for your people over 65. Medicare, you have pre-existing conditions. Medicare, there is no waiting period. Medicare policies cannot deny coverage based on pre-existing conditions. People have to qualify for Medicare by, working in the United States for a certain amount of time. Check out the key concepts video for all the rules on Medicare. Medicare Part A, this is buildings. I always want people to think of buildings when they think of Medicare Part A because it covers the hospital and things that happen at the hospital. This is your inpatient hospital care. This is your home health care in the buildings, okay? I mean, I don't mean to sound crazy, but if you think about Part A as the buildings, I think it really does help. The other part with Medicare Part A is I try to have people think of Medicare Part A as A for anybody. Anybody can get Part A as long as you qualify for Medicare. There is no extra premium for Medicare Part A. Anybody and everybody can get Medicare Part A as long as you qualify for Medicare. You can get Part A. It doesn't cost you anything extra. Part B, totally different animal. This is going to cost you extra. You're going to pay a premium taken off of your Social Security every month. That amount changes every year based on what Social Security decides you should pay. Some people elect not to get Medicare Part B because they're still working. Some people get it right away because they just want it. Medicare Part B covers the people. That's what I try to tell people to try to remember. I think it helps. if you got a better way, let me know. But Medicare Part B, I think, covers the people. That covers your doctor, your outpatient care, the medical services. So the people treating you, that's covered by your Part B. Surgeon is going to be what I think the question, your doctor, who's the question of what Medicare part does your surgeon's fee come under? That's going to be under Part B. Part C, these are the plans you're seeing on TV in the fall all the time. These are sold by private insurance companies. These are called Medicare Advantage. These are a combo. They take A and B and they D and they roll them together into this one thing where they're sold by a private insurance company, and they kind of give you a little bit of everything. They'll always be on TV talking about extra benefits, so that is your Medicare Advantage plan. Okay, Part D, this is prescription drugs. Some people just need this plan. They've got still great insurance somewhere else, so they get their Part A and that they automatically get, and then they just get Part D. Sometimes they don't get this at all, but this is a separate plan you can buy. So this covers your prescription drugs. So people would buy Medicare Part D because they would just need prescription drug coverage. If they have a question on D, I think it's going to be that it's a drug plan and that you have to have Medicare Part A or Part B to qualify for Part D. Social Security terminal illness, I think this is one thing to remember. Social Security does pay benefits to people with ALS or end-stage renal failure. That is end-stage kidney failure. I think you could see that question on your exam as a question. But for all the Medicares, please check out the Key Concepts video. There's lots of great stuff on medical programs in Social Security. One other question I think you could see, it is 40 quarters to be fully eligible for Social Security. Medicaid, this is a program for low-income people. I think that'll be the question. If it's not the question, it'll be that it is a joint program between state and federal. It is not fully federal. It is not fully state. It is a joint program where they cost share. So one of the things the Washington State program went into was quite specific was cost containment concepts that managed care, that's going to be your HMOs, PPOs, but that also there was other concepts like pre-authorization, your primary care physician, so that you had to understand those pre-authorizations. So make sure you understand all of those. Again, Key Concepts video for the health insurance has a awful lot about how the primary care physician works as a gatekeeper. I think that is a major question that's going to be there, but let's go into a bit on managed care. HMO. So an HMO is a health maintenance organization. Basically, they are a network of doctors. You see a primary care physician. He's your gatekeeper. I think that's the question for your test. He helps control the costs. So you see a group of doctors in your network, and you don't leave your network. He refers you to specialists if you need to see a specialist. So after HMOs come PPOs, they still have a network of provider, but you can go out of network and just pay higher costs. You do not need a referral to see a specialist. That's one of the differences. You can just go straight to the specialist. Obviously, you'll pay a little higher. They control, there's a little bit more with copays, and you do pay a little bit higher upfront cost in your premium to use a PPO than an HMO. Combo of the two, the hybrid is the point of sale plan, POS, and that would be a combo of the HMO and the PPO. I think the question is going to be on the HMO gatekeeper, and that the PPO allows you to go out of network or see a specialist without a referral, and that maybe you see higher costs. All of them use copays to control the costs. So you, not necessarily these copays, but some form of copays. For example, $25 to see to go to the doctor, $50 to go to the specialist, so much X to see go to urgent care, and so much to go to the emergency room. That is one of the ways that they discourage you from going too often. Obviously, if it was free, you might not go if you had nothing wrong with you, and also to make you go to your primary care doctor as opposed to just popping down to the emergency room for absolutely everything, right? So Washington State was very specific that they did want you to understand cost control, so make sure you understand copays is one of the ways that they control costs. Also, one of the ways that they help you with your costs is maximum out of pocket. This was not on the Washington State, but I would know that the maximum out of pocket stop loss is the maximum you will pay for the year. So once you reach the maximum, that is all you pay. So you're going to pay your deductible and you're going to pay your co-insurance. Then there'll be a maximum. So if your deductible is $2,500, there'll be another amount above that. Say it's 10,000, I don't know. And once you hit that, then you're done. And the insurance company pays 100% after that of all covered expenses. So you won't pay anything. You won't pay for your copays. You won't pay for your drugs. You won't pay anything once you hit your maximum out-of-pocket amount. You may need to know how to calculate out-of-pockets. It's pretty simple. It's basically just take the deductible off. It's not a super complicated math because you're going to have only like a simple calculator there. So don't overcomplicate it. There are some equations in one of my quizzes. Just use that. It's the super simple. Don't overcomplicate it with some of the comments people have had. It's going to be the simplest math ever. Take the deductible off and times it by the split. If the insurance company is paying 80%, just times it by 80%. And then there'll only be 4 choices because it's multiple choice. So don't overcomplicate it and don't let the math confuse you. Washington State did not have on their list that calculating maximum stop or calculating copays at all was something that had to be done. So there might not be any math questions on there at all. I don't know. But if there are, don't overcomplicate it and don't overthink them. The math is always very, very simple on insurance tests because they know you do not have anything but the simplest calculator and a little piece of scratch paper, and some insurance tests don't even let you have a piece of scratch paper. So they make it a very simple math question for you. Okay, major medical. This is your traditional medical with high limits. Provides very broad medical coverage with high benefit limits, deductible, upfront out-of-pocket expense, very before your deductible applies. This is your basic, right? Cost sharing after your deductible is met, 80/20. This is what we're all familiar with. Not really your HMO kind of thing, right? This is your major medical. We know we got we pay a $5,000 deductible. We've got an 80/20 split. And we've got this kind of stuff covered. So this is major medical. This was one of the things Washington State wants you to understand. And I think everybody pretty much understands this because everybody has it. Covers hospital, doctors, other medical coverages. And so you just have to understand. So you got a $1,000 bill. You haven't met your deductible yet. You're paying the whole bill, right? Because you got a $5,000 deductible. You've already met your deductible. You've got a $1,000 bill. You're paying $200 and they're paying $800. So just know your cost sharing. 80/20, 90/10, whatever the cost sharing option is. They did not go into that you had to know the split. They just went into that you needed to know major medical. There are also other ones, such as basic hospital and basic medical. Those are covered in my other videos, but Washington State did not specifically mention those, so I'm not sure they're even going to be on your test, but please review the other health videos. This video is getting over an hour long, so since they're not on there, I'm not going to include them here, but please go and review the health key concepts video just so you have an idea in case they are on there, but they are not mentioned at all on the Washington State list of items. So I'm not including them here. Go look at the key concepts just so you have an idea on what the basic coverages are. HIPAAs. We all need to know HIPAA, right? Health Insurance Portability and Accountability Act. It's federal law. Protects your privacy, protects your health information, guarantees you can portability for carrying your records around, protects your pre-existing condition, guarantees renewability. Just know your HIPAA laws, mostly privacy, right, and pre-existing conditions. So get your HIPAA, know that. Okay, COBRA. COBRA's federal law. COBRA is for people who have lost their jobs due to reduction in hours or job loss. They've been laid off. It's also for people who've gotten a divorce or they've been relocated. Your former employer can charge you 102% of your premium. Sounds rough, but that is 100% plus a 2% administration fee. Companies with 20 or more employees must offer COBRA. If they're smaller than that, they do not have to offer COBRA. So keep that in mind. That is probably the question, the 20 or more employees. Okay, disability insurance. Disability insurance is basically about providing income. It replaces your income when you are unable to work due to disability. So a lot of times that's 60 to 70%. So a lot of times it's 66.6%, 2/3 of your income. So keep those numbers in mind, 60 to 70% or 2/3 of your income. Two important periods to remember when talking about disability income: the elimination period. The elimination period is the period you have to wait before they start paying your disability. So the longer the elimination period, the lower the premiums. So if you have a 90-day elimination period, the lower your disability premiums are because you're waiting a lot longer, right? So you want a shorter elimination period if you want to get your money sooner. But if you want to pay lower premiums, you want a longer elimination period. But this is the amount of time between when you actually became disabled and when the benefits start to kick in. That is your elimination period. So you became disabled today. If you had a 30-day elimination period, 30 days from today is when you would start getting your benefits. This one is always on the test. Social Security disability has a 5-month elimination period. You wait 5 months and you get your first disability check in the 6th month. Know that once, probably on your test. Do not confuse elimination period with probation period. Probationary period is the amount of time between when you bought the policy and when the benefits start. So to prevent people from buying disability policies when they're actually sick, they put in a probationary period. This is normally just for illness. So this is like for you, you have a 15-day, 30-day, 90-day. A lot of time that's all it is. And normally it's just for illness. And it's just at the beginning of your policy. So you don't buy a disability policy just like when you're actually coming down with something, right? So that is normally right at the beginning, and it is only don't confuse it with the elimination period. It's not that. It's not for the disability. It is right at the beginning, and it is for you to wait so that people do not buy disability policies when they're already sick. Elimination period is once from the disability to when you actually get paid. This one is a waiting period right at the beginning after you buy your policy. Okay, like we said, disability is about loss of income. So you are going to get a percentage based on what you earn. So normally 60 to 70%. Some of them are 2/3. I don't think that's going to be testable. Just know that disability is about loss of income. Washington State was very specific that you know all the types of disability. Partial disability. This is one that it reduces your ability to work temporarily or partially, and it may result in a decrease in your income. So partial disability, they want to know that you're partially disabled. They also wanted to know that you are presumptively disabled. I think this is where the test question really lies. Presumptively disabled is a total disability where you do not need to prove that the disability prevents you from being able to work. So it's things like loss of 2 or more limbs, deafness or blindness. So some people are deaf and can do a job without even it affecting their job at all. Some blind people can perform jobs. I actually have a blind friend that runs a corporation and makes millions. Has no problem doing that, but has presumptive disability where he does not have to prove that because he is completely blind. Because of his disability, he would not have to prove he was disabled. He would receive 100% disability from his disability insurance if that was the case, simply due to the fact that he is legally blind. So, he would be presumptively disabled. Okay, recurrent disability. This is something that happens and comes back. This is usually people that have been disabled in something that, like say you had your lungs damaged from something and it just came back over and over again, or you got a disease that recurs from something. This would be a recurrent disability that comes back, where it goes away and then it comes back, and it comes back after a period of time. Like you thought you went away, but you came back, but it was caused by somebody else, right? So, or like say you hurt your knee at work and it just went out again, or your back or something like that. I mean, those obviously would be workers' compensation, but you get the idea. Those would be recurrent things where you were good for a while and then you were disabled again. Permanent disability, you're going to see this. A lot of our veterans have this. My husband served in the military for a long time. We know a lot of veterans that have permanent disability. They have long-lasting, irreversible disability, horrible things in their back, horrible things in their legs, missing limbs and stuff, and missing eyesight. So anyway, long-lasting, irreversible, prevents the insured from working, and the health insurance pays benefits permanently. Residual. So this is you were really bad and then you got mostly better, but it didn't completely go away. So it's still sort of partially disabled. So there's just a little bit of it left. And then it pays a portion of the difference. So you didn't get all the way better, but you're not completely disabled anymore. So they take so you went back to work maybe on a limited basis. So it pays you a difference between what you're able to get with your income and the benefit to make you whole. So Washington State wanted you to know all of those different types of disability. It also wanted you to know how disability insurance works, that, the policy owner buys the disability insurance, pays the premiums, and then has a disability, obviously, which is causes a disabling injury or illness, and then receives income payments. So this is basically you're basically buying something for the what if scenario. When the what if scenario happens, you receive payments for income. Two different types, occupational and non-occupational. Occupational covers disability due to work-related injuries or illnesses. A lot of us know that by its other common name, workers' comp, right? That's going to be your occupational. Non-occupational covers disability due to non-work-related injuries or illnesses. You can also buy insurance that covers you occupationally, private insurance. So it is more expensive because obviously most people are covered by workers' compensation. So most people are buying on the non-occupational, when they're buying private insurance, they're buying non-occupationally. But when you are selling any kind of disability insurance, it is one of the things that you will ask somebody what they do for a living. Certain occupations are excluded, like pilots, so they cannot usually buy disability insurance, depending what kind of pilot they are. Some of them are completely excluded from being able to buy it, depending what kind of pilot. But in other ones, it costs a lot more. Butcher obviously costs a lot more than office worker, a lot more dangerous jobs. So mechanic, a lot more than secretary. So depending, whether you're buying it on that occupational or non-occupational, just understand the difference. It's pretty self-explanatory. Okay, one of the things that State of Washington did specifically mention they want you to know is if you change your job, there is a provision, change of occupation provision in health insurance, where the insurance company can reduce your benefits or increase your premiums based on you changing your job. So if you decide to change from being a secretary to being a butcher or to a mechanic, they can increase your premiums or they can reduce your benefits. So if you become more hazardous or less hazardous, it can affect your rates, and it can also reduce your benefits if you were already doing that job and hadn't told them. So it is called the change of occupation provision, and it is one of the things they specifically wanted you to know. Jobs that are more hazardous can make your premiums more expensive. Jobs that are less hazardous make your premiums cheaper. So make sure that you are well aware of that because it is specifically one they want you to know. Another one that specifically they want you to know is Key Man Disability Insurance. Companies can buy Key Man Disability Insurance to cover an employee that they think is critical to their business. They buy this and then they are the insured. So they would be the beneficiary if something happened to the person. They would get the disability payment, and it would pay the monthly income to them to cover the retraining of somebody else to replace this person. So that would cover the company for the training of the person. Very similar product, buy-sell agreement for disability. These are for partnerships. If your partner becomes disabled, your partnership would own a buy-sell agreement on each other, and you would be the beneficiary. You would get the payment that would allow you to buy out your partner and own the business. So you would no longer have the disabled partner in your business, and you would give him the money and you would fully own the business without the disabled partner. It's called a buy-sell agreement for disability. Both of these also exist for life insurance, and basically they're just to make sure that you preserve your businesses in the event that one of the partners became disabled. So for your exam, one of the silly things is you do need to know that how these are taxed, even though, and you become an insurance agent, any insurance company you work for will tell you never to discuss tax things with anyone. So, so both of these are not tax deductible for the business, whether it's the buy-sell or the Key Man. Not tax deductible for the business, but the benefit when they, if they use them, is also not taxable. So they would not be able to deduct it, but if they had to get it, they would. It would come in tax-free. So that is the taxable thing. There's probably a question on that since it's specifically mentioned in the Washington State material. So make sure you know the answer to that, even though after you become an agent, every insurance company you work for will tell you never to discuss taxes with anyone about anything because you're not a tax professional. So while we are on disability, let's hit one more, the waiver of disability rider, just to make sure you understand that. This is on your premiums if you are disabled. And you have this waiver on your policy, the insurance company will pay your premiums for you. So if you have a waiver of disability rider, that is on your Washington State list. So waiver of disability rider. If you become disabled, your premiums are waived. The company pays your premiums for you during the time you are disabled. Let's hit this one here because this is a specifically mentioned in the Washington State material. This is an incontestability clause. It is going to be on all state exams everywhere. So after a health insurance policy has been enforced for 2 years, your insurer cannot void the policy or deny a claim based on misstatements on the application. So make sure you understand that 2-year limit. If a health insurance policy has been around for 2 years, they cannot void the policy or deny a claim based on something that was done in the application, unless it's fraud. So if you just made a boo-boo on the application, maybe you wrote your birthday down wrong and you put yourself a little, a year younger, I don't know what the goof up could be, but a misstatement that you didn't, was unintentional, but even if it would have affected your premium, they can't go back and get you unless it was something that was fraudulent. All right, illegal occupation provision. This is one they can get you for, though. If you are committing a felony or engaging in illegal occupation, your health insurance is your health insurance company will deny all liability. So if you are engaged in illegal acts, committing felony, or you are pursuing your illegal occupation, your health insurance will not cover you. Intoxicants, narcotics, or other controlled substance. The insurer is not liable for losses while you are under the influence of any intoxicant, narcotic, or controlled substance. If you fall down the stairs while you are high, your insurance company is not going to cover that. So this is a provision that was specifically mentioned by Washington State. So was the last one on illegal occupations. So make sure that you understand both of these because they're putting them both there for a reason. Okay, long-term care. Long-term care is for people who need to receive care in a nursing home or in their own home, but they are not receiving care in a hospital. So understand that this is specific type of insurance. It is normally not covered by normal health insurance. You have to have special types of insurance for long-term care policy. Circling back, I think one of the questions is going to be that the 8 hours of initial training and 4 hours of ongoing training you're going to need for your CEs. So make sure you understand that for the exam. Long-term care, it's basically what you're eligible for and the level of care you need and the level of services. So long-term care can be home health care, it can be assisted living, it can also be a nursing home. They're all different levels of care, right? Nursing home is much more professional, heavy duty 24-hour care. So assisted living is a little bit less care. Home health care nurse comes in a couple hours a day. So depending what level of care you need, maybe you have adult daycare, right? So, different people have different levels of care that they require. One of the things that determines how much care you require is the activities of daily living. Know what they are: eating, bathing, dressing, toileting, transferring, incontinence. Usually inability to perform 2 of these is what triggers a long-term care policy. So if you cannot perform 2 or more activities of daily living, your long-term care policy will activate and you will be eligible for long-term care. Most long-term care policies are on a per day basis, so they pay $1 rate per day. But these are some of the rules of long-term care. They are guaranteed renewable. Insurance companies obviously can't cancel them as you get older, right? They can't take your money when you're younger, and then when you get older and you get closer to using them, off they go. They have to provide coverage for the chronically ill. So people that have diseases like ALS or MS as they get older, too bad. You have to still be able to have the coverage. Minimum benefit trigger, unable to perform 2 or more ADLs, like we mentioned earlier. The activities of daily living. I think that is going to be the question. And the guaranteed renewable, I think that will be the other question. And the third question, if there is one on long-term care, will be that long-term care gets a 30-day free look. Long-term care and Medicare, because we're talking about our older folks, they get more, a little bit more care in the free look area. We have to be a little bit freer with our concern. So 30-day free look. Okay, let's go into some of the other healthcare plans you can have. These are also in the key concepts, so we're going to race through them a little bit. High deductible healthcare plan. This is going to be one where you have those super high deductibles. Keeps your premium low. It is mostly for people that are healthy, have preventative care, right? So you want to have that really high deductible because you want to just keep those low premiums. When you have a high deductible healthcare plan, you can have an HSA that is tax deductible. You can then use tax-free withdrawals for medical benefits. You cannot use it for non-medical benefits before you're 59 and a half, or you'll pay a 10% penalty. I don't know why there would be that on the exam, but just know that if you take non-medical things out of it before 59 and a half, you'll pay a 10% tax penalty. It's tax deductible for medical things. It is a savings plan. Does roll over from year to year. Some people do use it for retirement planning. Don't know why Washington State wants you to be a tax planner. But anyway, it goes hand in hand with the high deductible healthcare plan, and that is, it can be used for your medical expense. As a couple of cousins, FSA, you cannot have an FSA and an HSA in the same year. So if your employer has an FSA, if that's on your exam at all, the question will be use it or lose it by the end of the year. You usually fund it, but it is used for qualified medical expenses, but your employer usually establish it. The other one is an HRA. This is one that is employer funded. I don't know who works for these companies, wish I did, but your employer funds it, and it does not affect your health care plan, but it is a little fund that reimburses your qualified medical expense. Dread disease policy. This is one they specifically wanted you to know in Washington State, and this is the only state I've ever seen it called this. So be sure that you know, a lot of states call this a cancer policy. So be sure that you know what a dread disease policy, sounds horrible, right? Washington State need to call it something else. But anyway, dread disease policy provides a lump sum benefit for bad, horrible diseases paid upon diagnosis of that disease, often cancer, but it could also be heart disease or other bad diseases, I guess, dread diseases, but they're named specified diseases. So know what dread disease coverage is. That is a lump sum benefit for a dread disease like cancer. Okay, next up, hospital income policy. This is actually one of my favorite policies to sell to people. I think this is absolutely an amazing policy. But anyway, hospital income policy specifically mentioned pays a stated amount, such as a daily amount when you're confined to the hospital. Some pay you a great big amount on the first day, then a daily amount after. Some pay you the same amount, like $300 a day. Whether you use it or not, whether your health insurance pays for the whole amount, you still get the stated amount. So if the hospital income policy says $300 a day, even if your other health insurance picks up the whole nut, you still get $300 a day on your hospital income policy. So it is a policy that I really like, because it helps people really, if they're confined to the hospital, being the key word. So that is one that if you see something about hospital income, just keep that one in mind. That one was specifically mentioned by Washington State. They wanted you to know, and I think you will see something about hospital income being a stated amount or a daily amount. So make sure you know that's what it is. It's not a reimbursement policy. It is a stated daily amount. Accidental death and dismemberment policy provides a benefit for death or loss of limb and loss of sight due to an accident. So the benefit is the principal sum. If you see something mentioning the principal sum, that is used to pay for an accidental death. Capital sum is used to pay for accidental dismemberment. If you see a question asking you about the capital sum, they are talking about an accidental death and dismemberment policy. I think that will be the question. They always use this capital sum. I don't know why you need to know that, but apparently these states really think you need to know the capital sum is what they're talking about when they're using it for accidental death and dismemberment, and that the principal sum is for the death, the capital sum is for the dismemberment. So just keep that in mind, that will be the question, and that if somebody loses, obviously loses like their sight temporarily, but got it back, if it was a accidental death, dismemberment, loss of sight policy, that they wouldn't get anything. That would be the trick question, that obviously if they lost just temporary use of their hand and got it back, or they lost temporary sight and got it back, that it wouldn't pay anything. Okay, a couple more of those waivers and provisions, since Washington State's really big on those. You have, since we're on the accidental death, you would have a beneficiary. Since you could die, you would have a beneficiary, like a life insurance policy. So, anything where you're going to die, you would need to have a beneficiary. So, change in beneficiary provision allows for you to change the beneficiary at any time you want to, unless it is irrevocable. Very rarely is a beneficiary irrevocable, but occasionally it is, but normally it isn't. So if you have a change of beneficiary provision, that allows for you to change your beneficiary at any time you want to a new beneficiary. People want to switch, right? You divorced, you don't like your sister anymore, she was your beneficiary, or you got married, you don't want it to be your parents anymore, and now you want it to be your wife. So change of beneficiary provision, specifically mentioned by Washington State, you want to change your beneficiary, you can do that whenever you want to. One more of those riders. This is your cost of living rider, goes with your disability insurance. It basically increases your benefit to go along with the cost of inflation, keeps up with the cost of inflation. As things goes up, you basically raises your disability insurance, so you keep up with things. So it's not $20 a day because you bought it 40 years ago, right? It's gonna keep up with the cost of living. So it is a cost of living rider or COLA rider that you added onto the policy. Since we're talking about accidents, there are two different ways to define accidental injury, and they are one of them is broader than the other. Accidental injury can be defined in a policy as accidental bodily injury, which is damage to the body is unexpected and unintended. Or accidental means, which is the cause of the accident, must be unexpected and unintended. So a policy that uses accidental bodily injury definition provides broader coverage than a policy that uses the accidental means definition. So just know that accidental bodily injury, damage to the body is unexpected and unintended, is a broader definition than the use of accidental means. So that I would really know. Make sure that you are very familiar with that. And if you need to pause here to read both of these and fully understand that, I would do that now. We're getting there, promise. One more thing, the state of Washington wanted you to know, impairment rider. Impairment rider is an amendment where they can exclude coverage. This would be kind of out of the ordinary, but it is on your list of things you need to know. So this would be where they could exclude a pre-existing condition. Not super common, but just know that it could be where it may be for a temporary, but it could also be permanent, where a pre-existing condition could be excluded from your benefits. That would be an impairment rider added on to your health. This one was not specifically mentioned, but it is very in almost every exam. Coordination of coverage. This is a method of integrating benefits when you have more than one health plan. So this is when someone has, maybe they have Medicare and another plan, or they have private insurance and the VA, or they have they're covered under their own plan and under their spouse's plan. Primary plan pays first, secondary plan pays the remaining. That's to bring you only up to 100 so that nobody is, nobody's overpaying, right? You only get paid up to 100%. So this is where the two insurance companies coordinate the benefits together. It's called coordination of coverage. I would be surprised if you did not see a question on this. It was not specifically on their list, but I would know that if you do see something called coordination of coverage, you're talking about two insurance companies talking to each other to make sure nobody's overpaying. Okay, this is another one of those riders. They want you to know about notice of claim and proof of loss. You must provide the insurance company with 20 days. You have 20 days to provide them notice of their loss and 90 days to provide them with proof of loss. They have 15 days to provide you with the claim forms. I think the 15 days is actually going to be the question. So just make sure that you know that. I think we covered it earlier. Misstatement of age or gender for health insurance. When you misstate age or gender, actually I just had somebody that I had to change their son. We had misstated their teenage son as a girl. Probably saved him a whole bunch of money for a couple of years. He wanted to make that corrected, raised his premiums on his car insurance a whole bunch, but good. He saved a bunch of money for a couple of years. It was just a boo-boo by the insurance company. But when there's a misstatement of age or gender, the premium is corrected to the proper age, or gender. So it was corrected to him being a boy, and teenage boys cost a lot more for car insurance. So in that case, the premium went way up. So misstatement of age or gender for health insurance, in this case, when there is a misstatement of health or gender, the premium is corrected. It goes down if you're younger, obviously up if you're older, and depending on whether you're males or females, women tend to live longer, men tend to statistically die sooner. So, it can affect your premiums. So, misstatement of age or gender will affect your premium. That is a provision Washington State specifically want you to be aware of. Okay, workers' compensation. I would keep in mind that most things are that this is an exclusion. Most disability is going to mention this as an exclusion. Obviously, things are not going to be covered by your disability that are going to be covered by workers' compensation. So just keep that in mind. It will be one of the exclusions that they'll put in there to try to trip you up. Workers' compensation is things covered by workers' compensation are not covered under any of your disability. Okay, group health insurance, contributory, non-contributory. Obviously, contributory, everybody's paying in, right? Non-contributory, only the employer's paying in. That is going to be your old-fashioned. You work for some great old-fashioned company that loves to pay all the bills. Maybe you got a pension plan too. But that's going to be one of those old-school companies. I have a lot of great videos already covering a lot on contributory and non-contributory. I have one that is called Medicare, Social Security, and retirement plans. I have another one called retirement plans, where I go really in depth into your contributory and non-contributory plans and the taxation. Check out those if you're still struggling with these concepts. I think they will really help. There will be links to them in the description. Group health, not going to go into a lot of details because I got it in a whole bunch of my other videos. Please check out my key concepts video for a lot more on group health. If there's going to be a question on group health, I think it's going to be this one. Who holds the master policy? It's going to be your employer. You're just getting a certificate, right? We don't have individual policies in group health. Anything else, please check out the key concepts video for health insurance. Please also check the last minute review for life and health, and just skip the life questions because I know there's a ton in there that'll help you. Also in the description, I'm going to link the glossary. It's always good to have a read through those definitions. Maybe it gets you one or two little pickups on the exam. Always good to grab a last minute couple of wins. So I would grab those. Okay, we're at the end. I think anything else that I haven't covered is in all my other videos. There isn't very much. I would watch my key concepts video for the health insurance exam. I would also watch my life and health last minute review, skip the life questions, and I would go through my health insurance test that is online. Some of the questions obviously aren't going to have the Washington State stuff for you. This is my first state specific review that I've done. It came from someone in my comments who was struggling and allowed me to be part of their testing journey. Thank you so much for allowing me to be part of it. It took me a little while to get the video out, so I appreciate you allowing me to be part of your journey. I hope in some way this helped you, and I hope that it has helped some other people as they are watching it. Washington State does not have a pre-licensing requirement. You do not have to take a pre-licensing course. I highly recommend that you do if you can. If that is not something that you can do, just do your best. Whatever you can do to get the most information into your brain before you go and test the first time is the best thing you can do, because obviously the more you know going into it the first time, the less times you got to go back. But if you've missed it one time, two times, just look at those as practice tests, right? And get right back up on the horse and go back. So to that very special person that inspired me to make my very first state-specific test, I thank you for allowing me to be part of your testing journey. And I am always humbled by my wonderful people in my comments. So thank you to all of you. I will see you next time. Looking forward to a very wonderful journey next year with you. I am 1 year old on YouTube now. So thank you to all of you for making this 1 year very exciting for me, and looking forward to much more. Take care. See you next time.